my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. The two bullish Andrews pitchforks you can see on my daily chart is the original late March to early July action and the more recent early July to mid-September one. Both these are crucial in the running of this market and to the overall bullish incentive. In the original late March early July pitchfork, the middle time, currently 271.5, had shown back in August how good a resistance it was. Then in mid-September, the lower time, currently 263.75, of the newer early July to mid-September pitchfork started taking on some of the heavy lifting of the bullish support and started showing the more recent and more acute bullish angle of attack. Now admittedly, we had made one close below it and another later close right on it, but no two consecutive closes below, which was important. Anyway, that led to 2 weeks ago the market pushing up over the previous August high and then on to higher highs still. Yet still capped overhead by the middle time of the original bullish Andrews pitchfork. We also entered, though properly was only last Tuesday, with an immediate countering bullish above the stomach pattern, and that's the congestion overhead between 267 even and 269.5. There was an immediate rejection, but the toing and froing led to some large intraday indecision that eventually went out to a third consecutive session, and that was on yesterday. All this was between the overhead middle tines and the newer lower tine below of the July to September bullish Andrews pitchfork. As you can see, this market, like many other grain markets, is getting squished. Anyway, last week all this action, which I can now see some of the results of, prompted me to think about the August to September period being a possible hesitation area in a possible larger July to date bullish halfway hesitation. Now I know that is a huge ask to think about, and I hope you will think about it, that is. I for one will certainly keep considering it, but just in case, I've labelled a possible target X last week for such a pattern up off the top of the daily chart in the 288.5 area. That was all I said on the matter last week, and all that I'm saying on that today. A couple of final things to remember, and they are paramount, and something I've repeated again and again. Please continue to keep in mind the bullish March to July Andrews pitchfork is still very much intact, and until that is broken, redesigned or reassigned, then it will rule the overall bullish incentive. Plus, this is all taking place in the shadow of July's monthly key reversal up. London UK feed wheat. So, since the market peaked up back in August over the flatlining long moving average, currently at 196 even, failing to make a single close up over it at the time, prices had dropped away, down to the lesser Fibonacci levels at 183.45, 182.20 and 181.60. 5 weeks ago prices stabilised there just under the short medium moving average, currently at 193.30. And then 4 weeks ago they started once again to rise. Now the rise was somewhat spectacular and uncalled for, as the market moving up made 3 gaps within 2 weeks and still continued to move higher. Up through the then slowly declining medium moving average, currently 189.20, and 2 weeks ago up over the long moving average once again, properly this time. We had a little hesitation at the end of 2 weeks ago that ran into the start of last week for a strong kick upwards made on Wednesday last week with an immediate countering key reversal up, just combined with a bullish engulfing pattern that pushed prices up towards testing the old March 2013 high at 205 even. At the beginning of this week, the market launched a combined bullish engulfing pattern and possible key reversal up that finally cracked the March 2013 high. Now regarding this March 2013 high, I said in my commentary from 2 weeks ago, and I quote, "and are now seemingly stalling a little as we approach the March 2013 high at 205.05. However, I also added immediately after that, and I quote, All this action has allowed me to draw a July to September bullish Andrews pitch hook, and it is the lower tine of this pitch hook, currently at 202 even, that has recently shown the bullish angle of attack. Thus, the middle tine above, that's currently at 218.55, is the main rising bullish resistance beyond the March 2013 high. It is, as I've said elsewhere, until this bullish Andrews pitch hook is broken, changed to a bullish shift pitch hook, or reassigned and retired into something else, then it will drive the bullish incentive higher in this market. End of the quotes. One final thing to add, and I've expressed this last week here and elsewhere in some of the other grain markets, which had shown similar aptitude. It is to look at the July to date action as a bullish halfway hesitation type pattern. With this in mind, I'd previously placed a prospective target X in the 213.15 area. This is not as insurmountable a target as elsewhere in other markets, but let's not kid ourselves, it's still a big ask, and I've not altered a bit from last week. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.